Time now for a check of what's happening in the world of business. Our business editor, Kate Moody, is here. Kate, so let's begin. In Lebanon, we've been talking about that during the main body of the news bulletin as well, but the country in yet more economic turmoil this week.
Yeah, the president has ordered an investigation into a currency crash, possible currency speculation after the value of the Lebanese pound dropped to record lows. On Tuesday, the black market rate for $1 hit a record £10,000. Just a few months earlier, the average was closer to 7,000. The official exchange rate is $1 to 1,500 Lebanese pounds, but there is a thriving black market for foreign currency. If the central bank investigation finds proof of currency speculation, the president said those responsible should face justice. The pound's collapse has led to soaring food prices. About half of the Lebanese population is already living below the poverty line, and there have been another wave of protests across the country. The UK has outlined more pandemic spending to support businesses and households. As it eases its lockdown restrictions, the government says its vaccine rollout will bring an economic recovery some 6 months earlier than initially projected. Official forecasts predict GDP will expand 4% this year. Luke Trego reports.
The United Kingdom's finance minister said he'd do whatever it took. And in the face of 700,000 job losses and the deepest contraction in the economy in 300 years, Rishi Sunak has prolonged coronavirus support measures.
The furlough scheme will be extended until the end of September. For employees, there will be no change to the terms. They will continue to receive 80% of their salary for hours not worked until the scheme ends.
The UK has charted a course out of lockdown over the next several months and ultimately intends for businesses to begin paying their employees up to 10 and 20% in August and September, alongside government aid. However, the UK's emergency support package currently stands at €471 billion, with questions from some quarters over how public debt will be paid back. To help fund it, Sunak's announced a reverse in trend over the nation's corporate tax for the first time in years.
In 2023, the rate of corporation tax paid on company profits will increase to 25%. Even after this change, the United Kingdom will still have the lowest corporation tax rate in the G7.
Tax on company profits currently stands at 19%, though the finance minister sweetened the deal, exempting small businesses and incentivising investment from larger firms in new equipment that they'll be able to offset against the new tax.
The European Commission is also setting the stage for more financial support. It's recommended that a freeze on public spending limits be extended until the end of 2022, which will allow governments to continue propping up businesses and households. The proposal will have to be approved by EU member states. It could face opposition from the likes of Denmark and the Netherlands, but the EU's Economic Affairs Commissioner argued that additional fiscal support would be needed for at least the medium term.
Today, the Commission states clearly that pulling back support too quickly would be a policy mistake. The best way to secure public debt sustainability, the best way to reduce the risk of scarring and economic divergence is now to support the recovery.
Let's check in on the day's trading action now. Mostly higher close for the major European indices. Just Milan closing in the red. We saw gains of about a third of a percentage point in Paris and Frankfurt. German stocks hitting a new record high earlier in the session. The FTSE 100 was up 1% or just under in London as UK businesses rallied on that government support. Wall Street's mixed. Tech stocks have been dragging the Nasdaq down over 2%. The Dow Jones just managing to stay above the flat line there. Shares of airlines and cruise companies have been trading higher on optimism about the vaccine rollout in the United States. Well, up to 30,000 jobs could be at risk at Paris's Charles de Gaulle airport if air travel doesn't pick up soon. Officials that run the airport have been encouraging people who work in shops, as baggage handlers or in-flight caterers or in air traffic control to consider other job opportunities, at least in the short term. 2 of the 3 terminals are currently closed. Plans for a 4th have been scrapped. Air France has warned of more layoffs in the wake of the more than 7,500 that were announced last year. Unions say there's a whole ecosystem hanging in the balance.
Savoir qu'un emploi supprimé chez Air France ou chez ADP, ça équivaut 4 à 5 emplois chez la sous-traitance.
Well, the travel industry is hoping its business will pick up soon as traditional airlines in the U.S. cut back operations amid massive losses. Lesser-known budget carriers are waiting in the wings to snatch up some of their market share. Cami Nedlek has more.
The travel industry may be grounded, but low-cost airlines could be about to take off in a big way. American budget carriers have just a 10% share of the US market, but analysts expect that to double this year alone. As larger firms shrink to cut costs, budget airlines are expanding their routes and taking delivery of new jets that can fly coast to coast. Until now, longer domestic flights were dominated by traditional carriers.
The budget airlines tend to fly nonstop from wherever they start to whatever that end destination is. It's easier for these budget airlines sometimes to add and drop flights because they don't have to worry about the implications of what an addition does to a hub. It's simply, what does this route do from A to B for our profitability?
The added competition could force larger carriers to slash prices at a time when every penny counts. Spirit, Frontier and Allegiant are all hiring. And Allegiant even says that although it qualifies for coronavirus relief from the US government, it can manage without it. This, as American Airlines could furlough some 13,000 employees. In 2019, it hired almost 1,000 pilots. The disruptive effect of low-cost airlines has been felt in Europe for years. But thanks to the coronavirus pandemic, the scales may now also be tipped in favour of low-cost travel stateside.
I think I can remember being in an airport. Not very recently, though.
No, I don't think any of us can. Thank you very much indeed. Our business editor, Kate Moody, thanks for bringing us up to speed.